Hello and welcome to the second day at Fonserats here in London. My name is Lucia and today I'm joined by Antonia Lim from Impact Cube. So Antonia, it's absolutely great to have you on the show today, and of course it's ahead of your panel that's later this afternoon that we're excited to see. But I guess before we dive in, it would be great for the listeners to have a bit of an introduction to yourself and the company.
Oh, well, thank you very much for having me. So I'm Antonia Lim, I'm Chief Investment Officer at Impact Cube. Impact Cube is a sustainable investment advisory firm. We collect and clean our own proprietary data. We build tools to help investment selection, so security selection, fund selection, monitoring and performance reporting. And we also co-create custom indices that help both passive and active investors.
Fantastic, that's brilliant. And the session, I guess a short blurb around it said that you're going to be focused on climate risk modelling. Well, why is that such a hot topic right now in finance?
I think it's hot because it affects price, and price is something that everyone can care about, whether they're an alpha quant and risk for their own pensions. And we're going to be talking later about how climate affects the balance sheet through fiscal assets, how it comes to profitability, and also through the growth in terms of growth of revenue.
Okay, fantastic. So it's the bottom line.
It's the bottom line.
And when we talk about climate risk models, what are we really talking about? For maybe the listeners back at home who maybe haven't heard of these kind of risk models before, is it more about predicting like physical risks, or is it more about climate policies, how that's going to affect?
Well, we'll be taking a look at all three later on in the panel. I'll be showing it in simplistic terms, so it matters. Obviously, when you're a quant, you understand that it's both the data and the model that matters. And I'll just be showing a very simplistic valuation model for equities to show how, for physical risk, that carries through the balance sheet through PP&E, which is actually a really big component of some companies' valuation. Secondly, I'll be showing how transition risk and opportunities affects the growth potential for companies through their different revenue lines. And because we collect really detailed data about revenue, we match that to whether that's going to be aligned to climate or in a good way or a bad way in terms of profitability. We can look at the overall profitability of the company and that growth potential. And lastly, through carbon pricing, so that really hits the margin. And even through emissions quoted now, the price is increasing. You need to know those emissions accurately. Yeah. Because you could be thinking that you've already got that price and you might not if the numbers aren't quite right.
Right.
And that again hits the bottom line.
Okay, brilliant. And I guess the topic of climate risk, has that always been something that has personally been important to you, or has this been or where did this kind of come from?
I wouldn't say always. I'm too old for it to realise. I think it's important to our futures. Think about close to our professional lives in terms of long-term investment, and the world that we are in, will be in, and leave behind.
Yeah, absolutely. That's great. And I read that you'll be discussing kind of later how to integrate the climate risk to traditional asset pricing models. This sounds incredibly complex. What makes it such a tough challenge?
It is complicated, like any modelling.
Yeah.
And you need to set out actually what you're trying to achieve at the beginning. And the reason that I'm going to be showing really familiar, simple models is to show actually even with a really simple thing like the residual income model, where it's a stark, here's the value of an equity, here's the book value and here's the residual income. In that book, for example, with physical risk, that book value is made up of total assets and total liabilities. And within those total assets, you've got property, plant and equipment. And you can imagine that the value of that, you have a cyclone, you get hit by severe weather, that damages those real assets. That means it damages the balance sheet.
Yeah.
Therefore, that's price. So it doesn't have to be the most sophisticated model to be able to see the impact. You can see that, it is a function of what happens in the future, and climate is part of that, whether we like it or not.
Yeah. Okay, brilliant. Brilliant. And another big thing that you are going to speak about is moving beyond this kind of simple ECG models. Are you able to kind of give us a little indication of what that might look like, moving away from that?
Yes, so our research department I'm showing simplistic ones so that we can give, the idea of how these things connect.
Yeah.
So we have more going on that's sophisticated in the background where we look at interactions between these things. I'm separating them out to show how physical risk and transition risk and carbon pricing can affect in different ways. But of course, that's, in an integrated world, they all interact. And so that's where the sophistication starts to come in, when you start to actually model the greater financial ecosystem, actually, which my co-panelists will show a little bit of as well. But they are really interesting models, and it will lead to not only interesting forecasts that are meaningful, but also interesting products where you can see how they actually impact the real world. So we'll talk a little bit about that as well.
Brilliant. And for those who are attending your panel later, what's one element or one question that you hope that they'll walk away thinking of after listening to you?
I hope they ask themselves, have I thought about how climate affects the pricing in my models? Is it in there?
Yeah.
Because if it's not, you're at a severe information disadvantage.
Brilliant. And one last final question. If you could describe the mood, I guess, in this space right now, I guess, you're taking climate risk into the center of it. Is it cautious? Is it curious? Is it optimistic? What do you think the sentiment's like?
I think curious is a good word, actually. So lots of people are interested in it. And, we're at a quant conference. Quants love information.
Absolutely.
Love models. Right. Nobody at this conference wants less information than anyone else. Yeah. So I'd say curious. I think I wouldn't say anyone's feeling optimistic about climate, although there are real opportunities in it, and I don't know if everyone's quite seen all of those yet. So I think that's an exciting area where climate's sort of been associated with risk so far, and of course there's lots of risk related with climate, but the opportunities of who's actually going to benefit, the winners. And looking at that in more, really looking into the businesses and the financials in detail to understand that. That's where I think the gains are. So, yeah, I think we'll see more in that space coming.
Oh, brilliant. Well, thank you so much. And thank you so much for being on the pod, and I can't wait to watch the panel later.
Thank you.